Stock market analysis and projections. Important information. Make sure that you read this slide. This is all about our analytical style and about you using the analysis that we provide and the importance of trade ownership, making a trade your own so that you don't wait for anything else or anybody else to help you with the management of that trade. All right, stock market analysis. We're going to look at a review of corrective formations. Then we're going to look at the level 4 chart grid. We're going to look at 12 charts there and go through it pretty quickly, but this is going to be a long segment. Plus, we're going to look at the VIX, and it says that trouble is near, and I'll show you why that's the case. So let's switch over first and look at this chart. This is a weekly chart with cycle brackets on the bottom. And this helps you see the ebb and flow, the money coming into the market, the money coming out of the market. And what's important to note is that the longer a market rises, the more brief period of time there is for it to correct. And when you get a market that rises a very long period of time, then you only have a number of weeks for it to have a correction. If I go back to this period way back over here, looking back here in 2020, 2021, after the pandemic, you can see that these long periods of advance only brought minor declines or minor pullbacks. This was about a month. This was a couple of weeks. This was about a month in these strong upward trends. This was 10.5%, 5.7%, 5.8% declines. These are very modest corrections. To me, anytime you're in a declining phase that completes, you've had a correction of the cycle and then moving up. You can see in here as the reversal scout gets a little bit to the downside in here, but not much because there wasn't much time. This one was so strong it never turned down for a brief period of time right over here. But you could see this where it peaked right over here near the midpoint of the cycle. It had a lot more time to decline, 14.6% right over there. And when you had a breakdown of this cycle, then you had a couple of waves on the downside. This last one over here, which lasted 2 months, was 19.2%. So you could see the importance is where does the cycle make its peak? These are called the translations. And when they make their troughs or their lows above where the previous one was, those are positive translations and positive configurations. You can see in here that in the bull market that began over here in October, and that low came right on time for us right there, that it created a positive cycle. It had a correction of 9.2% over 6 weeks. This was a longer correction. You can see where the reversal scout turned over, and this one over here was about 3 months total in there. It fell 10.9%. Look at this one. Reversal scout turns up here. It tells us about the bottom right there and has been positive during this whole period. We have said, no matter how many times we've said a correction is going to come, we've said the market remains bullish, and that's been the case. So that's where we are right now. And you can see every single one of these cycles has a corrective phase. Everyone, when I go way, way back over here, you can see they all have corrective phases. There is none that doesn't, and that's how each of the cycle periods end. So there is one likely coming right over here. What's it going to be? Well, it could be as little as 5.5%, 6%. It could be as much as maybe 10 to 12% based on the limited time period that we have right over here. So it's important to understand this. The last part of this is notice the 13-week simple moving average. Every single one of the cycles, every single one going back years and years, when it comes down, it tests or breaks the 13-week moving average. That you can see is right over here, coming up here, and the minimum downside would take it down to 5,000. Big deal. I mean, that's about a 5% downside move. It doesn't speak to very much of a decline, but it does speak to the minimum amount of decline that we're likely to have right over there. Now I'm showing you this a little bit differently. Let's look at the bull market right over here and that same time frame that we have right, where does that go? Right there. Just get all of this in there right there. And that is right over here from the bottom of that correction. And you can see on the daily chart over here that whenever the momentum conditions were positive, this is the slim ribbon on an area chart. Whenever this was positive here and this was positive here, the market was in positive condition. When you got into this corrective period over here, well, then that's this right over here, and you get red. You get continued downside moves. This hasn't turned red yet. Let's just look at this last cycle right over here and right over here. This is why we keep telling you that the market has been bullish. The slim ribbon PO on the bottom, all of those resumption signals right there. We're not in the correction until this daily chart starts to tell you that it's rolling over and you start at least to go purple. So you know that the momentum has changed. That has not changed. So what does this tell me? This tells me that the corrective period that we're looking for hasn't started yet. And when it comes, it's likely to be about a month long or a little bit longer, because that's all the time that's available in here. We talked about April and into May as the time frame where there's likely going to be a correction. The middle point of this, or the ideal trough, is about the first or second week of May. That's what we think we're going to do is have a corrective period here that takes you down into that time frame. Now I'm going to look at a lot more charts in here, but I wanted you to see those corrective periods. This is the level 4 grid right over here with the S&P 500, NASDAQ, and Russell. Let's look at them one at a time, and you can see this is what I just showed you. So this is the 23.6% right over there. That would be a 5.3% correction down to about 49.80 right over there. That's minuscule. But you can see that there's not a lot of time for the decline. So that means when this tops, this period of March through May, somewhere in there, we're going to see a decline. If it got down to the monthly 23.6% right over there, which is just above the 38.2 on the weekly, that would get you then closer to 4,800 and more like a 7.5 to 8% correction on the downside in there. That to me seems very reasonable that we get into that period for the correction. People are saying market's never going down. It's only going up. And I've been around here 50 years. I have seen these markets time and again. They eventually have corrections. And now what we're seeing is the market's likely to have a correction and then move up into the fall, even to higher levels out over there. Our year-end cycle analysis showed the market at best getting up to 5,100 for the year. Well, obviously it did much better, and AI has been responsible for that. That doesn't change the patterns of down into the spring and then up here into the summer and fall. That's what we believed then in January, and that's what we believe now. It's just that the levels have moved up because the market has told us to do so. Here's the daily chart on the S&P 500, and you can see here on the bottom is the option bias study. This has been just almost perfectly giving you positive signals. And here it says stay on the long side in the stock market. You got little top warnings in here that occurred, and you got little corrections. But overall, the option bias study has told you so. This top of this upper channel, or the slim cloud as we call it, takes you up over 5,300. So that is a possibility, but we're already at 250, 240. So that's not a very big deal. And then this period right over here takes you out into May. That aligns with what we're talking about on the weekly. So it would be a cycle in here. If it holds above that level, 5104, then you know that we're still in rising phases. And if it breaks below there, you'll start to see momentum deteriorate. Here's the momentum in here, and you can see solidly positive. We said nothing bearish about this market other than corrections are likely to come. I showed you why. Now you can see not time yet until the market tells you. This has been on the daily chart, positive momentum. And here you could see on the 2-hour chart, the askSlim market condition indicator up here at 100. This is not overbought. This is a market condition. And it tells you that the weekly and the monthly is still putting strong upward force on the market, it won't let it come down. When it get down under the 25 is when I start to say we're testing that strength under the minus 25, and then you know something really has changed. So positive momentum here on the 2-hour, and that remains. Take a look here at the NASDAQ right over here, and you could see the same story. We're looking for it to peak in here and then come down into May. It's reasonable for it to come down to about 16,800 right over there. Here's the intermediate 23%. That would be crazy bullish if it only got down to 17,570. But those are the levels we expect this correction to come down to in here. Let's advance here on the daily. You could see the cycle rhythms in here, and this top of this upper channel taking you to 18,630. Approximately up over there. When this bottomed in here, it told us that we were beginning to move up, that this cycle had bottomed. You could see the option bias study telling you keep your option positions biased to the long side. That's why this was created, so you don't get in trouble and run over by the momentum in the market. Here you see the daily momentum conditions, pretty similar to what we see in the S&P 500. And you can see in here that the askSlim market condition indicator had a little dip, but didn't get to the 25, and now is moving back up over here as you continue with positive conditions here in the 2-hour chart. Also, that's a look at the NASDAQ, and now let's take a look at the Russell. We just had a question on the Russell. Now you'll notice some extra lines in here. The reason for that, and I'm just going to go over here to the daily chart over here, and that is that there is a trough due over here that is in April. And then if I look at this bigger one right over here, that's due in June. So this is due sometime around the second week of April or June. When I go back here to the weekly chart, I have both of those scenarios in here. So we have a little bit out of sync with the rest of the market. But then when this correction is over with, you can see the support buy zones. This is very likely to take off in here and get up to, well, maybe well beyond 2,200 in there. This is the major 61.8% here, and that's very likely to be taken out at 2,140. I don't have the higher ones in there right now. We'll be putting those in there once that low is established, but you can see in here we're looking for a decline in here with a period of risk potentially going out into June. If it's out into May for the S&P 500 and the NASDAQ, then this could very well be out into June over here for the Russell. Still, when this correction is over with, this takes you out into the fall for the next rally. So we'll be looking for much higher prices in the Russell. So positive momentum reestablished over here as you got this minor correction, and you have momentum in here, but you have this candlestick pattern there, this evening star, giving me a little warning that this maybe is an area that it is about to peak. We'll see if you can get up over here. Again, if it breaks under 2039, 2040, that would be a breakdown and tell us that the intermediate pattern has peaked. I think I missed that on the NASDAQ, telling you what that level was here in the NASDAQ. I want to speak to that. 17,765. If it breaks below that one, that would be where you're in a negative condition also and in a correction. So and the Russell under, let's say 2040, and that gives you the indication that the intermediate peak is in place and we are going into the correction. In the meantime, you could see positive cycle brings you up to that next high level right over there. And you can see in here on the market condition, on the OBI, telling you over here, and just take a look right here, telling you over here where it was starting to give you some negative warnings. But then right over here where it turned positive again, it said, okay, it's time to keep yourself biased on the long side. And that has been accurate. Here you could see it's been kind of choppier here for the Russell in recent days as it went to neutral, but then turned positive again on the daily momentum. And you can see here's the example of it being super positive on the market condition indicator, getting down, testing the 25, and then rolling back up and turning positive again. This tells you that the intermediate and longer term energetic forces prevented it from turning negative and turns positive. Again, that overall is a bullish indicator for the Russell. Again, this is our look at what the level 4 grid looks like, and that's what I just worked off of. So if you want to become a level 4 member, you get this to put up on your Thinkorswim site, and you can refer to this, and we update this on a regular basis. I want to talk about the VIX right now because it's so important to this analysis. This is the VIX weekly on the left. This is the VIX daily on the right. We have talked about this 29-week cycle right over here bottoming sometime right over where we are now time-wise, and then getting an upward spike here in the VIX. In other words, the decline in the market. This takes you out into that May time period right over there. So right now, you could see on the daily chart, this is getting ready to bottom. So you have a bottom getting ready to form here on the daily. You have a bottom getting ready to form here on the weekly. And let's just switch over here very quickly to a look at the monthly chart on the VIX, because this is so important right here. And you could see that we are at a very important level on the monthly where the VIX is likely bottoming. And when you get to a time frame where the VIX is bottoming on the monthly, and these are just fantastic bottoms right there, you get huge upward spikes in here where you can get up to the 40, 50 level in the price of, especially the price of puts, the big demand for puts or for protection. We are getting into that right now. So the monthly bottoming, as you see right over there, the weekly bottoming, as you see right over here, and the daily bottoming, as you see right over here, what does that tell you? Sometime in the next number of days, maybe a couple weeks, the VIX is going to bottom and very likely going to have a large upward spike. If that's the case, then the S&P 500 or the indexes are very likely to go into this corrective period that we're talking about here on the weekly on the left, on the daily on the right. And that is why we look at some of the evidence analysis that gives us a great sense for the overall conditions of the market. So I showed you the corrective formations, why it's so likely that there's going to be a pullback in the next month or two. Looked at the S&P 500, showed you all of those conditions. They're all still positive. That correction that we talk about, that is basically 100% sure to come because every one of the cycles has had it for decades. Well, that may be very deep. It may be shallow. The odds are now it's going to be shallow. Plus, the VIX analysis says that trouble is near. I showed all of that to you right here on March 22nd.